welcome to Mel on the Street. I'm your host, Mel Schaefer, and today we're speaking with Bruce Campbell, founder and portfolio manager at StoneCastle Investment Management, Inc. Great to have you here today, Bruce.
Yeah, thanks for inviting me on.
So let's get right to it. CPI data printed this morning and showed that core inflation eased to 2.5%. The U.S. Federal Reserve will issue its decision on interest rates next week. What are you seeing in terms of the economy? And maybe you can touch a bit on how the Fed's money supply pays into things.
Yeah, I mean, as far as the economy goes, the perception right now is that things are starting to slow, and I would think that is the case. If you look at a number of different areas, that's what we're seeing. In particular, if you look at something like the ISM manufacturing number, that's been declining, and I really do believe that we've probably been in a global manufacturing recession for some time now. If you look at the services, though, that's where things are a little bit different in the US, and that the services have continued to be fairly strong and been fairly resilient. So you do have a bit of a bifurcated economy for sure. And then at the same time, if you kind of look at what's happened with the last quarter of economic releases from companies, you see that earnings, maybe the growth rate is starting to slow a little bit. You're not seeing negative earnings or negative revenue, just the growth rate starting to slow a bit. And then on top of that, we've seen money supply, which really we haven't seen go negative in probably 3 or 4 generations, was negative. It turned down and started to decline back in 2021, brought us all the way through, the market decline in 2022 and 2023. And then just earlier this year, we actually saw it move positive and go back above that zero line, which is fairly significant because if you look at, the capital markets and really how constrained they've been on just large cap and the most liquid names, a lot of that probably has to do with the money supply. Now that we're starting to see that money supply expand, you could see, a real broadening in the markets.
And what do you like? I mean, the market this morning is pricing in 100% chance of a rate cut, but only now 20% that it will be 50 basis points. Where do you see the Federal Reserve moving?
Yeah, I mean, that's a tough one right now. And I mean, it'll ebb and flow now between next week when they make that decision. The decision today or the data today really probably has an impact on that in a significant way. If we had seen inflation moderate more, then, the wisdom and sort of the consensus is that, the board, the Federal Reserve Board would have gone 50 basis points because it was required and that inflation was there. Now with the fact that, we've seen inflation slow, but not probably as slow as the market would have liked. Now it's really in that camp of 25. The interesting thing will be what happens going out to the rest of the year, because there's a November meeting and a December meeting. And I think the market is still pricing in, that we're going to see at least a full percentage point cut from where we are now to the end of the year. So that would be the 425 basis point cut. So, are they going to front end it and do, a 50 now, or are they going to do 25 and then wait as the data comes by? Most people are thinking that, that's probably what's going to happen. But, as we've seen, this can really change quickly.
So in terms of the market, September hasn't been great so far for bullish investors. We saw the first 10 days of this month show the 5th worst start to September in 25 years. What trends are you seeing in the US market, and what about the Canadian market?
Yeah, I mean, the big trend that we've actually seen developing since probably the beginning, kind of middle of July, is a move towards more defensive sectors. And that probably was investors starting to see some of that slowdown in earnings and be able to do work that would indicate that there was going to be that slowdown in earnings, and not necessarily slowing down, but just the rate of change is starting to slow. And so we've really seen, the utility sector, which I believe now is the top performing sector in the US on year to date, which I don't think most people probably would guess at this point in time. We've seen the real estate sectors do fairly well up until yesterday when the US banks got hit halfway through the day on some of the capital requirements. That sector was starting to really do well, and I think it continues probably to do well. All those sectors that are interest rate sensitive, but also a little bit more defensive. And the interesting thing will be, is this going to be a trend change where, markets go and become really more defensive? or is it just, kind of that midterm correction that we see very typically in, sort of the September, October timeframes, especially during election year?
So, how should investors be positioning themselves for this on both sides of the border? And Bruce, what opportunities are you seeing in particular into the end of this year and even into next year?
Yeah, I mean, how we've looked at it and how we've kind of positioned is we have a bit of a barbell approach in that we own some of the defensive sectors and some of the sectors that have been interest rate sensitive. So the utilities and REITs, we have some exposure there. We've cut back some of our exposure in technology. We have sort of more specific areas or specific companies that are technology focused. And then we don't have a fairly big weighting in energy or materials right now, and we have a bigger weighting in industrials, and that's kind of the way we've positioned it. We're watching fairly closely to see what happens with technology, because I don't think too many people can argue that, if you were to pick a sector for the next 10 years, technology is probably where you want to be, but that doesn't mean that it performs for the next year or two, because we have seen, such enthusiasm for the sector, and we've seen it become fairly crowded, especially if you go back to kind of the April-May timeframe, and it might be on a, kind of more extended delay or more extended period where it doesn't perform. And then also the other thing that we want to watch is that economic activity. So right now, the economic numbers coming out of China haven't been very strong, and you've seen the materials and energy sectors, pull back as a result of that. And whether or not that, we start to see some type of acceleration there, and those sectors start to lead and come out stronger in the sort of last quarter of this year and then leading into next year.
So, are you seeing anything cyclical? Like, can investors be hoping maybe that, like retail investors in particular, that there's some sort of movement down into mid caps and small caps?
Well, if you look at overall breadth, you certainly have seen it start to diversify out. So for quite some time, all we talked about was the Mag 7 and everything that was happening with the S&P, and there was a lot of talk about the fact that we weren't really seeing any leadership for the other 493 in the S&P. If you now look at the equal weight S&P, so you take every company that's in there, and as opposed to capitalization weighting, you give them an equal weight, that's recently hit a new high as well, along with the S&P. So it's showing you that you're starting to see that leadership broaden. And then when you look at interest rates coming down, one of the things that's been, there's been a few factors, but one of the things that's been extremely challenging for a lot of the small cap and mid cap companies is the higher interest rates has hurt their earnings profile. And now you're starting to see those interest rates are starting to trend down. So we've seen 3 rate cuts here in Canada. You're going to see the first one, I think, next week for sure in the US, and then that trend continues. And at that point in time, it means their cost of capital, and it means their borrowing costs are also going to decrease, and you could start to see kind of that renewed ramp up in earnings and profitability from those companies. And I think then you're going to start to see a down cap move. We're already starting to see that sort of anecdotally. You can't look across a lot of the technical data yet and say, small caps and mid caps are really rearing and roaring and going strong. But you're starting to see certainly pockets of that where you're seeing companies that, if they're executing well, they will be up and be up fairly strong. And then the other trend that we've seen in Canada is there's been multiple takeovers happening. And in the past, when those takeovers have happened, it's usually a strategic buyer that's a public company, and they're using their stock. In this case, it's quite often a strategic buyer from private equity, and they're using cash, which is really voting, 100% with their conviction in the fact that they're willing to buy cash and buy a business that they think is undervalued. Investors haven't come back into that sector, with both feet yet, but I think that it could be something that we see out in 2025.
And lastly, Bruce, pivoting now to StoneCastle Investment Management, which of course you founded. Can you tell us more about your funds and what sets them apart from all the other funds that are available to investors?
Yeah, I mean, we do a couple things that we think is quite unique at StoneCastle. So we have 3 funds that we manage. 2 of them are growth oriented, and one's an income oriented fund. With the growth oriented funds, what we're doing on, kind of every given day is we're doing two things. First off is we're always trying to figure out whether or not we're on offense or defense. And we can tell you at any given time, are we on offense or defense? And that's based on, what we see in the markets and what we see with some of the technical tools that we watch. And we position our funds according to that. And then the second thing is we have a bottom-up screen that we use where we're ranking companies and we're looking for accelerated earnings growth. We do a lot of meetings with individual companies, and so we know the background of those companies, and then we just watch for the catalysts that those management teams have talked about that's going to accelerate that earnings growth. And quite often we know of companies, and we know of the sort of the background behind that company long before the market jumps on it and finds out about it. And so as a result, we're kind of there, when they're still small and mid caps, and hand them off to sort of the mid cap and large cap managers as they grow.
Well, that's awesome. It's been great talking to you, Bruce. Again, Bruce Campbell of StoneCastle Investment Management. Thank you.
Thanks so much.